if you are building credit, you are in the right place. We are going to be covering all of the hot credit builder products out there, the do's, the don'ts, and what I would do if I had to start all over and build from nothing to an 800 credit score. My name is Credit Coach Nicole Scott. Make sure to watch all of these credit building videos inside of this series because I'm telling you that it is full of gems. All right, in part one, we left off at BoomPay, where you can actually add your rent and you can add the last 24 months. BoomPay is one of my favorite, and if you are already paying rent, there's no landlord involved. Watch the first part. Now, I will say this gem you want to pay attention to if you don't remember anything else. Remember this: if you knew better, you would do better. The only other way to legitimately add a primary trade line with history is by getting on a pledge loan that belongs to somebody else. All right. Now, how does that work? If you have a pledge loan, a secured savings loan, like with Navy Federal, maybe you have a family member that's had one or a friend, they can add you as a co-borrower to that pledge loan, and you will inherit that trade line, and now you guys would both have that primary trade line helping you build credit. I have a lot of people that I work with one-on-one, and I have a few husband and wives that work together on working on their credit, and that's exactly what they did. Was they both started pledge loans. We recycled those same funds to do them, and they added each other as a co-borrower. Now, obviously, if you're just starting out, you're not going to get that history, but if you do have someone that's already had a trade line established, maybe with like Navy Federal, you can easily get added as a co-borrower to that pledge loan. You would need to be a member with Navy Federal, but there's other banks out there that do secured savings loans as well. So that's a quick gem for you guys. You can also add your children if you want to help them build credit. So if you want to, say you're like, hey, my child just turned 18. I want to help them build some credit so they can qualify to buy themselves a vehicle or finance a vehicle, right? They're going to need some of that comparable credit. So adding a credit strong account, which we covered in series 1, part 1, adding something like that for $30K, letting them pay on that to get some experience under their belt, and then adding like a pledge loan, secured savings loan. Those would be 2 installment loans that we could add to their profile to help them get to that 700 so they can qualify for financing and have some of those comparable credit trade lines on their credit profile so the bank will tell them yes. All right, that's exactly what we want to do, and then they can go to the same bank that they got that pledge loan with, because they're going to want to go to a credit union versus the auto dealer. All right, so let's get into the next best. We've got Grow Credit here, very similar to Experian Boost. You're going to be adding subscriptions to your credit. Now, is this something that I would necessarily recommend? Probably not, right? Is it going to boost your credit score? Yes, but these type of accounts are just fluff on your credit report. They're not adding value. They're not comparable credit trade lines to financial institutions that would actually be issuing you a credit card or an auto loan or even a personal loan. They would look at these like, that's a subscription to Hulu. That we can't use that. So in my opinion, just leave that for what it is. If you decide to pay for subscriptions, so be it. But they're not going to really be taken serious by banks and financial institutions. Next up, we have the Extra card, and this is a unique trade line to say the least, right? So basically what Extra does is they connect to your bank account using Plaid, and that's going to be something that you got to get used to. Is a lot of these financial institutions, especially like fintech companies, which are basically alternative lending companies, right? And they lend out to people, and a lot of times they base their decisions on on the amount of money that they have, right? So the way that this extra card works is you sign up and it connects to your bank account, and your spending is based on the amount of money that you have in your accounts. And of course, you have a fee that you have to pay extra every month. It's either $20 or $25, and they report that to the credit bureaus. So it is kind of like a separate account, but it's based off of your banking data, essentially, right? So it can help you build up credit. Now, essentially, it's not a secured credit card either. So sometimes it has a hard time of being categorized, but it's very similar to like a line of credit, essentially, right? So right here, you can pay $20 for the credit building, and then you have the rewards plus the credit building. And you see right here, you have the debit plus spending power line of credit. So it doesn't necessarily report like a secured credit card. So sometimes, like I said, the credit bureaus don't really know where to put these type of accounts. So it can help you build credit for sure, but it's not necessarily going to be with a major financial institution, and it might be hard for other banks to use this as comparable credit. So it is a good tool for those of you that have a very thin profile and have a hard time getting approved for anything because you just need to add some more primary trade lines. But it is going to have that fee associated every single month, and there's really no point in only having these credit builder accounts for 3, 4, 5, even 6 months. You know, again, like I said in part 1, you really want to plan to build credit for a minimum of 12 months and anywhere from 12 to 24 months, because that's where lenders like to see. They like to see your ability to repay back debt as agreed and pay your obligations on time every single month. It's really important that you budget accordingly. Don't take on more than you can handle around and find out how bad your credit will be affected if you get a late payment with one of these credit building accounts. I see it happen. It breaks my heart and I can't stand it. But that's why it's so important for you to really put a budget together and say, okay, I can afford to, every month comfortably invest $200 into my credit building because I know I want to set myself up for success. And you can do that very strategically so it doesn't just flush money down the toilet. But a lot of these type of companies like Extra, like Kickoff, there are significant fees involved every month. So this might not be the best option if you're really looking to maximize your money, because this is not a company that's going to be able to offer you future benefits. Like, for example, if you did a credit building product with a bank, they could give you future benefits, no problem. You can even work towards what you ultimately want. Maybe that's a credit card, line of credit, auto loan, whatever the case may be. But these type of companies, very limited on the future benefits. So that's my only hesitation with, these type of companies, but they are great to help you initially build credit. I'll just leave it at that. You can check it out and see if it would be a good fit for you. I'll leave a link below so you can check them out. Bright Money, this is also home of the stable card. That is great for building credit. They offer a ton of different credit products to help you kind of build up. Now, if somewhere offers personal loans, that's where I would go because you can do a lot when it comes to personal loans. Now, it's very important to understand that when you are in the initial stages of building credit or reestablishing credit, you're working on your foundation, you want to get personal loans to reinvest into your personal credit. So say, for example, you got a personal loan from Bright Money, okay? If you go and get a $10,000 personal loan from Bright Money, use that $10,000, open a bank account with an initial deposit of $9,500 and do a secured savings loan with a credit union like Navy Federal or some of these other credit unions where you can really get future benefit and high limits in the future by simply investing in them with opening up a bank account and getting to 5 banking products with them. I have a whole guide covering that. Definitely need to get it. It's all in the link in my bio. So these are personal loans. They also have credit builder programs, and they are going to report based on your on-time payments. Now, this is only going to report to TransUnion and Equifax. So it does not look like they're going to be reporting to Experian right now for the Credit Builder program. So not all platforms are going to report to all three. That's why it's really important. And a lot of times things change, right? So, by the time I recorded this video tomorrow, they might say, hey, we're reporting to Experian. So always go to their website and check out their latest fees, because things are always changing with these type of credit builder programs. Sometimes they're changing things, so you just never know. But they have a lot of different programs in here. They also offer the rent reporting. So this is another way that you can add rent to TransUnion and to Equifax. So I really like the opportunity to add rent and then add the last 24 months. And you can add a ton of different apps and add the last 24 months of rental history. I would say, past 3 is a little excessive. It's really not necessary, but you can, essentially get 3 trade lines or a few different trade lines by adding your rent to different apps and platforms like Boom Pay, Rent Reporters, Bright, different platforms, and get that trade line and that benefit. But again, what is the benefit there? It's really just to add history to your profile, because what we need are installment loans, which are, basically loans, right? The same installment paid over and over, especially if you want to get an auto loan, personal loan, whatever, right? And then we also need to mix it up. We need a few revolving accounts, lines of credit, and credit cards. So we have to balance that out. And remember, we want to focus on quality, not so much quantity. When I was first starting, I was like trying to get as many credit accounts, trade lines opened as I possibly could, as quick as I possibly could. But I wasn't doing it strategically. And that's why it's so important to work with a coach that can tell you, maybe that's not the best plan. Let's look at it this way, because if I could do it all over, I would have done it totally different, guys. All right. So you could check out Bright Money. They got a lot of cool credit building products to help you build credit. Next up, we got Cred AI. This is a really cool platform. You can definitely check it out. And they offer different credit cards that are kind of branded. So you can definitely check them out. If you wanted to start a credit card company, you totally could. I really like Cred AI for that purpose. But basically, it's a very fintech-like company, and you can build credit. It's not necessarily like a installment loan, but more of kind of the extra in many ways, where it's like a debit card essentially, and it goes off a lot of your banking history. Cool thing about Cred AI is it's not going to affect your credit score, so it doesn't provide a hard credit pull. Now, as far as reporting to all three, I have not seen or confirmed that it does in fact report to all 3 credit bureaus. That's kind of the downside about some of these type of fintech companies. A lot of them don't report to Experian. You'll kind of notice that, but it is a cool card. It's a metal card. It's more of less like a debit card that kind of gets you to build credit. Very fintech, very, modern, if you will. Definitely check them out. I mean, it's really no benefit as far as the future goes, because they don't offer any sort of additional or alternative lending. That's kind of the downside about a lot of these fintech companies that are just credit builder based. If they offered future benefit, if they offered the opportunity to graduate to better opportunities, that would be a totally different story. But essentially, that's what we want to look for when we are building credit with some of these different brands, apps, and things of that nature. Is what future benefit, or what can I use you for? Because what benefit can I truly get from you? What can you do for me? What can I do for you? There's a two-way street in relationships, and eventually you're going to evolve. And the sad thing about these type of accounts is they're not going to be able to grow with you. So is it really worth getting it initially? That question is to be determined, and totally up to you. Next up, we have Current. They are a pretty cool cool, credit building opportunity. They give you the opportunity to build up some credit by simply spending your money. Very similar to the Cred AI and Extra card, more or less like a debit card that is based off of banking activity. Now, I like Current for the build card because you can have your teenagers who are just turning 18 build up some credit with this Current card, and it reports to all 3 credit bureaus usually around the beginning of the month. They have a few other options here where you can get your paycheck deposited early, but in my opinion, this is for people that are very, new to credit, just starting out, and can help you build up a little credit with very little fees and payments to them. It's essentially like a debit bank account, if you will. Next up, we have Varo Money. Now, Varo has a few different credit builder programs. They have the credit builder card, they have easy credit building, and they have stress-free credit. Now, essentially, the card is anytime you see card, you want to be aware of that, because the goal with credit cards, revolving lines of credit, right? Credit cards, we want to keep them open for as long as possible, okay? Now, installment loans and credit builder loans, those can be closed out much earlier because they're paid off, so that's no big deal. But when it comes to credit cards, we really want to be mindful of this, and if they are a secured credit card, we want to make sure that we budget accordingly. Most secured credit cards with financial institutions generally have a cap at about $5,000, so it is very minimal versus like a secured credit builder loan, which is a better option to go with because you can pay it off quicker. You still have access to the funds in many cases. We'll get there later on in this series, but Varo Money is a great opportunity for people that are fairly new to credit or reestablishing their credit, because with the credit builder loan, it is going to not cost a bunch of fees, which I love personally, because you can see that a lot of these places are just, sticking it to us because of we got bad credit. So they're like, hey, you're going to pay for a trade line. Now, in my opinion, their fees are kind of like the best thing about them because they don't have a ton of fees like these other cards do. So you can see right here, they accept any and all credit history. There is no credit score needed to qualify, no credit checks needed to apply, no minimum security deposit, no fees. You set your own credit limit. I know, right? Sounds too good to be true, but it is a very simple, you just move money onto it, and it's a great way to build up some credit, especially if you are starting all over and they report to all 3 credit bureaus. Those are the type of accounts that you definitely want to go with, are the types that report to all 3 credit bureaus. So that way you can select, 2 to 3, credit cards, 2 to 3 installment loans. You really don't need more than 5, but you want to open up all of these credit builder accounts at the same time, budget accordingly for them, and set up auto pay, and make sure that you stay up to date with your fees and plan for 12 to 24 months out, guys. Now, here's kind of the qualification to apply for the Varo Believe card. Have to have $200 or more in your incoming deposits in the past 31 days, and you cannot have any overdraft fees. Now, if you're building credit, you're building a relationship with a bank, do not get any overdraft fees, guys. This could be the reason why you are getting declined for things like secured savings loans or a pledge loan or different things when you apply for them, because you're banking with this bank and you're getting overdrafts. It's the biggest setback, if you will, because banks do not like that, okay? And another thing is, don't make a bunch of fraud claims on these credit builder accounts, because that's going to set you back a tremendous amount as well. So we really got to make sure that we're doing the right thing, we're paying it on time, we're not abusing it, we are definitely changing changing our mindset and ensuring that we are having a healthy, long-term, successful relationship with credit. Because let me tell you guys something. If you guys get a bunch of credit and then you misuse it, it's just going to end up in a bunch of debt, because at the end of the day, credit equals you're going to have a payment, right? This is not a grant. They're not giving us money. This is something that they are trusting us with. And us as adults, this is our adult report card. This is the only way that people are going to, well, not people, but financial institutions are going to be able to take us serious and say, yeah, they don't look like a risk, versus someone that gets late payments all the time, has all their credit cards maxed out. No, they're a risk. We can't, no, it's going to be a no. Look at it as if you were working at the bank, like you owned the bank. If you were the bank, would you feel confident lending to someone that constantly paid late and maxed out all their credit cards? No. So we have to completely change our mindset, and we want to build this foundation that's super solid, so that way we don't run into the banks telling us no, because we know we built our credit properly from the ground up. Our solid foundation is going to get us whatever we want, because if you build it, the funding will come, just like the Field of Dreams. If you build it, they will come. If you build it, the funding will come. I promise you that, because if you knew better, you would do better. You know how I always tell you guys. We're going to wrap up part 2 of this series. Make sure that you watch part 1 and part 2. I would say Varo would be a good option, especially for teens. So go after it. Do your own due diligence with all of these accounts. And if you want to put together your own game plan, you can always book a call with me to review it and make sure that you're making your next move, your best move. All of the links are for us to connect are linked below. You can also do me a huge favor, give me a thumbs up, leave me a comment below, and most importantly, watch the next video coming up next. I'll see you next time. Take care.